Okay, guys. So we're gonna be talking about. Let's just make this example as one of our last example to identify the trend. Okay. So hence I was saying that most people like they actually struggling with trying to identify the trend. See, someone else could have also tried to do these, but hopefully now I've tried to simplify it the best way for you guys to be able to find the clean book, perfect structure book for us to identify if something is an uptrend or a downtrend. Because when it looks like this, it is not that clean. You see, this thing it's not that clean, so it's not that beautiful. So for you to be able to say this was a impulsive, this was a correction in a structure that looks like this, it's a bit confusing. So you want to clear all the confusion out and be able to deal with something that looks so clean. Okay. So hence I was saying, since all this is what we are seeing on a higher time frame, it is going to be very difficult for us to say this was the higher, this was the lower low, this was the lower high, this was the lower low, this was the lower high. If you have not yet practiced as much as you can, or you haven't get to a certain level of understanding of the structure, therefore simply simplify your life by going where to the lower time frame and try to figure out that first, because the direction of the trend and also you knowing at that particular time which phase of the market you are currently in, it is very important. So it's useless for you to be going to a lower time frame whereas you haven't yet understood what it's actually going on in the what in the in the higher time frame, or haven't understood as yet that which phase of the market are you currently in. Are you in an impulsive or are you in a correction phase? Because if you are in a correction phase and we are in a down, the overall direction is in a downtrend, therefore you know you should be waiting for the market to finish the correction so that you can catch the impulsive move going towards the downside. That is the main thing that we are actually trying to do now. Wait for the market to finish the correction so that you can catch the impulsive of the market going to your direction. So in this case right now, it would have been difficult for us to ident- identify the impulsive and the corrections of the market. So what we could best do is to what try to go to a higher time frame higher and try to see will it make my life a bit easier, simple. We just want to concentrate between these 2 points right here and where the market is currently at. Okay, so if we go to a 2 hour time frame, yes, it's kinda looking a bit clear, but can we use 4 hour and see if will it make it more clear? Yes. So look, when we go to a 4 hour time frame, going to a 4 hour time frame, you could actually see that this is going to give you a what, a book, a picture clear, a picture book picture clear. So you can see this thing is giving you things like this: higher highs, higher lows, higher highs, lows. Yeah, well, and the market is currently in this push towards the downside. The market is currently in the push towards the downside. So as you can see, with this is can be easily be identified as a what, as a downtrend, which has a what, which has a lower low, lower high, lower low, lower high, lower low, lower high. So the market might, it's in a what, in an impulsive uh, phase of the market. So what is it that we are looking for? We are looking for continuation patterns towards the downside. Is the market giving you impulse continuation pattern towards the downside, so that we can be able to enter those trades going in the direction of the market? That is the only thing that we are looking for, because if you can be able to identify that no, the market was in a what, in a correction phase, yours what to do next is to wait unless the correction phase that we are seeing, maybe you are seeing it on a what, on a weekly time frame. For example, let's say this it's a what, for example, let's say this it's a weekly time frame. On a weekly time frame, you've just identified that this market it's in a, let's say for example, it's in a correction phase. In this correction phase, the market's gonna correct maybe let's say up to here, and then it's gonna give us another impulsive move to the downside. Obviously, if this is a weekly time frame, if you go to a 4 hour time frame, you're still going to figure out the certain structure going toward the upside. Therefore, you should know that okay, I'm looking for temporary buys. I'm looking for those short buys until my market gets to a certain level before I can start selling. As long as you are seeing the impulsive correction, impulsive correction, impulsive correction, you can still utilize that and make it use on the correction phase or on the impulsive phase. What I'm trying to make you understand is that the moment you try to figure out which phase of the market are you in the higher time frame, if that is a downtrend and you've just realized that you are in an impulsive phase, therefore we know for sure that we are looking for selling opportunities. You're just waiting for the impulsive market to keep pushing to the downside. You are looking for what? More selling opportunities. But if you are in a correction phase of a downtrend and you are in a weekly time frame, therefore you know that when you go to that smaller time frames, you can be looking for those short buys, because obviously the market is gonna always move impulsive correction, impulsive correction, impulsive corrections towards your direction. Okay, so those are the two things that I want you guys to understand when it comes to higher time frame. How do you make use of the higher time frame and the lower time frame? So the next thing that we're going to jump into right now is going to be what? It's going to be the continuation patterns. So we're going to talk about continuation patterns. What kind of a continuation pattern do I use specifically for me to be able to enter those trades and go down with them? We need to be looking at that. Okay, so now we're going to be looking at those continuation patterns. So my strategy last time, I found that the best simplest way to identify it was for me to say I trade flags, bullish flags, bearish flags. So a bullish flag, it's simple, something that makes, if let's say this was a bigger time frame trend, and then you could see that okay, now the market was something like this, it's in a what, it's in a downtrend, something like, now you can see that okay, this was impulsive, this was correction, this is impulsive, this is correction. Now the market, it's in this impulsive phase. You know for sure the market can be pushing down for a very long time, or it can push the market until the 90% rule. But currently you saw the market at this point. If you are seeing this on a weekly time frame, it doesn't mean now take the sell opportunities, because you do not know what is happening on the lower time frame. On a lower time frame, you might find that the market is still in the what, in the correction, which it can take your stop loss out first and then it goes your direction, you see. So you need to be careful of what you do on a higher time frame. On a higher time frame, you just want to identify the trend direction and also try to figure out which phase of the market are you currently in. And then when you go to a lower time frame, it becomes simple. You are just looking for continuation patterns towards the direction of what you saw, or towards the direction of the phase that you are in of the higher time frame. Hence, I said, if it's a downtrend like this, and then you saw the market was in this, therefore you know that this is a correction phase. And if this is a correction phase in a weekly time frame, therefore you know when you are going to a 4 hour time frame, you will be finding a structure which looks like impulsive correction. Therefore you know that you can make use of these corrections to take those back. You can use to make use of these continuation patterns towards the upside to finish the correction as buying opportunities. And then if this was the phase that you are currently in, you know that you're going to take those continuation patterns towards the direction of your impulsive phase. So these are the things that I want you guys to understand. Okay, hence now I'm saying we're going to be carrying on in terms of continuation flags. As long as you understand the phase and the direction, then you're good. So now we're going to be talking about continuation patterns that I use. I only use simple things: flags, bullish flags and bearish flags. So how does a bullish flag looks like? We're gonna have something that looks like this. So this is a what? This is a bullish flag. This is a bullish flag. And then the market is gonna continue to go up. Okay, so this is just a simple, straightforward bullish flag. So this is a bullish flag. And then the market can be in a, so this is okay, so if this is the uptrend structure like this, if that's an uptrend structure like this, you can use bullish flag anywhere, doesn't matter. So if something like this, so while the market is still here in this phase of the market, in this phase of the market, you do not just want to buy, when you are seeing this, on a weekly time frame you are seeing this, and then now you know that okay, the market is in an impulsive phase of an uptrend, therefore which means you are looking for buying opportunities. Therefore you're gonna go to a lower time frame, 4 hour time frame, looking for continuation pattern, so that if the market gives you some sort of like an impulse and then now you can starting to give you a correction, therefore you know that you're going to be drawing or what. But let's just wait with that for now. Let's just wait with that for now. We're going to look for what a continuation patterns to say the market is still gonna go up. Then you take those up buying opportunities. But I do not want you to cram this thing. I want you to understand this thing, because the very bullish flag you can still find it on a downtrend market. You can still find a market which is in a downtrend like this. Let's say this is a weekly time frame, and then we are seeing a structure which looks like this, and then the market is currently maybe somewhere at this point. Remember, this is a weekly time frame, and then obviously in a weekly time frame, the correction phase is gonna have power. It's gonna have power towards, so that it can retest the previous high and go down. Let's say when you're the market while it's still here, you're seeing what you are seeing when the market is still at this point right here. You are seeing what you go to a lower time frame. When you get to a lower time frame, you still find it the bullish flag. This is the bullish flag, meaning the market is gonna go up. So you can still take that buy opportunities in that point right here. Only if this thing is happening on a higher time frame, you can still take those trades, so that because you know that the market is going to be pushing towards your direction. This simply means that you understand the structure. You can use any strategy as long as you understand the structure, but you know that you mustn't be aiming anything higher than the 50 to 61.8% zone of the correction point right here, you see. But the right thing to do is wait for the market to be in an impulsive, so that you can take the continuation patterns towards the direction of the market. But if it's a weekly time frame, I mean, you can't wait for a month or 2 months or 3 months just for the market to get to this point. If you can make use of this, then make use of it. You see, it simply means that we have been crammed. Okay, so as we're saying, this is the bullish flag, guys. Okay, so we can still also have the what, and the other thing that we trade, it's a bearish flag. So bearish flags looks like this. So this is how your bearish flag looks like, and then it's gonna shoot toward the downside. This is how your bearish flag looks like. Okay, so the very same thing, you need to understand how to make use of your bearish flag. Bearish flag, it can be in a what, if the market is in a downtrend. Let's say this is a weekly time frame in a downtrend, and then you're seeing something that looks like this. This is a weekly time frame. Therefore, you know that when you go to a lower time frame, you are going to study this portion of the graph. So if this portion of the graph, you are going to be looking for what? You are going to be looking for these patterns. Impulsive, you want those small patterns, small impulsive, and then gives you a correction. So at the end of this correction, you can even draw just the trend line, that when the market breaks below that trend line, you are taking those continuation patterns towards the downside. Those are the only things that you'll be looking for. So hence I'm saying that it's not going to only work in the what, in the structure that looks like this of a downtrend. It can also work in a what, in a higher time frame of a what, in a higher time frame of a uptrend. So if this is the uptrend, it's a weekly time frame, and then it's an uptrend. So this thing can look like this. Maybe let's say the market is still here. No, sorry, the market, it's in a correction phase. The market is in a correction phase, and this is a weekly time frame. You do not want to wait for 2 weeks or 3 weeks or 4 weeks just for the market to even get to this point. Then that's when you start buying, because a weekly time frame is just for you to get the direction. Where is the market currently heading to? Therefore, you can make use of that or take advantage of that. You see, so you'll be looking for these opportunities in that particular time frame. So simple as it is. So you can use a bearish flag. It doesn't matter in an uptrend structure or in a downtrend structure, but of a higher time frame, so that you want that momentum, you want that strong push, because the higher time frame has got power, has got momentum. You see, so that is the advantage I want you guys to take note of and to learn it. Bullish flag, bearish flag, that is the only two things that we trade. But the bullish flags and the bearish flags, they can also be useless if you do not understand the time frames, and also you do not understand which phase of the market are you currently in. Therefore, which means those flags, they can be useless to you, because you're gonna get a flag, that bearish flag like this, but you're not understanding the structure, you're gonna make a lot of mistake. You see, so we're still going to get into more details of this, but for now I want you to have an idea of how I do trade, on how I take trades. It's based on what? For example, let's look at this one right now. So let's just say this is a higher time frame. For example, where is this one at? If this is a downtrend, let's just say this is on a week, on a higher time frame. So if this is on a higher time frame, you could actually see that, okay, but I wanted to us to remove this part of the graph. I wanted us to I wanted us to ignore slightly this part of the graph for now. Okay, so you come to the chart and then you'll be like, okay, this is the lower low, then the lower high, the lower low, the lower high, the lower low based on a higher time frame, and then the lower low. And then now you see that the market, maybe let's say, is going towards the downside. Let's just say the market is still here. Let's just say the market is still here. We can see that the market is somewhere here. It's going towards the downside. So you can't just go see this thing maybe on a weekly time frame or on a daily time frame, and then you say like, okay, this thing is really going down, I'm taking a sell. You can't do that. You still need to go to a lower time frame and go look for those smaller yana continuation patterns. So if the market is here, and then when you go to a lower time frame, maybe let's say you go to a 1 hour time frame, you get there, you would see a certain structure again. Hence I said, you see, if you are here on a 4 hour time frame, if you are here on a 4 hour time frame, you can't really see how is if the movement, if the market here is making any higher highs and higher lows. It's really difficult for you to be able to spot that. But look now, when you go to a 1 hour time frame, when you get there, you tend to see that, oh, okay, so actually this market now, it's giving me what, a lower low, and then it came give me a lower high. Now the market is going towards the downside. You could see what this was the more like a continuation patterns, because the market gave you an impulsive move and then started giving you a continuation. And then again it did what? It gave another, it gave this, let's say, it gave this impulsive move and then gave continuation, and then it started shooting towards the downside. And then again it gave this impulsive move, and then the market was in what? In a correction. So you just draw your trend line, wait for the market to break that trend line. When it breaks that trend line, you enter again, you shoot towards the downside. You must remember that the market will only be changing direction if the market doesn't respect. Let's say like in this downtrend, we spoke about this on part one. Hence I'm saying like we shouldn't be skipping parts. Follow these parts exactly as they come in part one, part B. You see the way it is they come, because I said earlier on that the market, when it's like this, there is no way you can say this market is gonna go up. This market is still gonna in a downtrend because they still have this break of structure. You see, the market is still, until the market breaks above this point, we can't say the market now is gonna go up. The market still needs to come break above this point. That's only when we're gonna say the market is gonna be going up. If not, the market can't be going up. So it doesn't matter if the market can makes a 10-year, we're still within the downtrend. Okay, until the market breaks this point above here, then we can be thinking that, okay, maybe the market, while it's coming down, it can be coming towards the downside to make head and shoulder before it shoots all the way to the upside. Like in this case, this was the previous high, this was the previous high, and then this was the a previous low. So this doesn't really mean anything that the market is going now is going up. No, you have to understand the structure first, then you can be able to execute your trades. Let's see, like in this case right now, you being able to identify that this was the impulsive, and then you could have said, okay, maybe the market here was in a correction. You could have taken the what? You could have taken the sell to say the market is gonna go all the way down. Remember, I said it's not always the case that you will win all the trades. But this is what you need to understand, guys. It's just simple basic things that will make you understand the market. So we'll continue with these guys now.